Okay, so what kind of situation we have at the moment on GBP, JPY? Just a quick update. Now, if you remember, basically, what did we say with the last analysis on this pair? We said, clearly, we know that the market has very strong structure here, and we want to see from here a push to the downside, which the market has now started very nicely. Now, what did we have from a weekly perspective? This very nice impulse, nice correction, and we wanted to see the next impulse to the downside at least to start. Now, if we want to measure this retracement, what are we supposed to be doing? Taking our Fibonacci from the high to the low of the impulse. And what we can see, first, the market respected the 50% retracement, broke back above, broke back below, retested it again, which is exactly what you expect after a fake breakout, and then made this nice move to the downside. Now, from a daily perspective, what did we have? Now, first of all, basically, we know that basically the market had created this W formation, and we expected from here specifically because this was perfect previous support, now turn resistance, we wanted to see the market make a move down. And after this first red candle, we made an analysis here again on TradingView saying what? Saying if here there is no opportunity to be looking immediately for a short position until we don't see a daily candle close back below the neckline, aka the previous resistance, now turn support, because you would be shorting at daily support. You have to wait for the daily support to break to the downside. And then the market broke it to the downside with this red candle, retested the structure, and created this nice move to the downside. Now, if you manage to find an entry inside of this area, now you're now running in some pretty good profits to the downside. Now, we have a downside target here for a GBP JPY. Now, no matter if you're already in the trade, if you already took your profits, because if we measure the next impulse to the downside, we can see that overall the market already hit the -27 of the Fibonacci taken on the retracement. Therefore, that is why from here we're starting already to get the retracement. What we can expect from here is the market to make a little bit more of a retracement, basically to go and test which structure, to go and test all the structure that we had created here. So this support, against support, against support, all that support is now turn resistance inside of this area. So if the market will go and retest this area, there is opportunity to be looking again for another short position on GBP JPY. So what we will be doing with students, we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to shift from a bullish market to a bearish market and provide to us one of our valid entries inside of this area. Now, if we go and see what is the situation from a COT perspective, so basically to see what hedge funds are doing at the moment on the GBP and what they're doing at the moment on the JPY, there are definitely some interesting things that we can basically extract from this data. So let's first of all go and see what is the situation from a GBP perspective. Now on the pound, we can see that with the last report, hedge funds have added another 7.2k short positions, bringing net positions at minus 6.6k, all the way up from the 35k that we had. So we now have more shorts than longs on the pound, and on the JPY, we can see that we went from minus 56k to plus 32k, adding another 6k longs, with the last report, which is exactly what you expect. Money to be flowing aggressively to the JPY as a safe haven during a period of uncertainty, and basically all JPY pairs making nice moves to the downside. So on the retracement, what we will be doing with students, monitoring price action inside of this area, waiting for the market to provide to us one of our valid entries. If the market will provide to us one of our valid entries, then we will be taking this nice short with a good risk to reward and good probabilities for a nice move to the downside. On the other side, if when the market will reach this area from a 4-hour perspective, everything will remain bullish, then the area will break to the upside and we will have to adapt as traders to the ever-changing market conditions, and we will be looking for this possible inverted head and shoulders to the upside. But at the moment, this area is resistance. We have the impulse correction and impulse pattern to the downside. We will have the confluence of the Fibonacci levels inside of this area, the 382 and the 50%, and we will be monitoring price action inside of that area because, as usual, trading is reactive, not predictive.